Open your bank account now. No, seriously, do it. Aren't you tired that the numbers aren't increasing as fast as you like? You feel like work every day, you have a side hustle as well, but that coveted $1 million mark just feels so unattainable. Okay, that's where I was 5 years ago. And if I had to make $1 million again by 25, here's exactly what I would do. If you don't know me, I'm a 7-figure trader getting withdrawals on a monthly basis just like this. Like I said, 5 years ago, I was exactly right where you are today, dreaming of that first 1 million. Fast forward to now, I feel like I've cracked the code multiple times over. But if I had to do it all over again, here's the 5 important lessons I'd follow. Just keep in mind, this isn't going to be for everyone. This is just what I would have done myself because it's the easiest way I've personally found to hit the $1 million mark. Lesson number 1, the power of compound interest. Yeah, you've probably heard this like 1,000 times from your parents or relatives, but compound interest isn't just some buzzword. It's the secret sauce. Let me show you the sheer power of compound interest. Let's take a look at this table over here. Starting with a modest amount of capital, I focus on consistent, small percentage gains daily or weekly. Even a 1% gain compounded daily can skyrocket your account over time. It's about patience and playing the long-term game. Now, instead of some crappy illustration of 1% per day, I'll give you the simple exercise to think about. Every time you take a paycheck, what do? For most people, they spend it. Every time you win $100 off a trade, what do? For most people, they withdraw and spend it. That's the problem with most people. They don't understand the concept of delayed gratification. If every time I won $10,000 on a trade and I withdrew and spent it, I'd never be able to amass this fortune, let alone the 250k live account I trade with every single day live. What I would do is spend as little as possible and trade with as much as possible. That way, I make the most amount of money and spend the least amount of money. Simple math, right? Your bank account grows the fastest this way. Lesson number 2, mastering one strategy at a time. A jack of all trades, master of none doesn't fly here. I pick one trading strategy, be it swing trading, day trading, scalping, and become a master at it. Focusing on one strategy reduces the noise and increases your expertise, making it easier to spot winning trades. We have tons of different strategies covering all types on our YouTube channel at your disposal. Feel free to use them as inspiration for your own strategy that you're gonna master. After you've gotten comfortable with this strategy, you can use it to execute with absolute precision. Look to expand your strategy arsenal to adapt to changing market conditions. Early in my trading career, I jumped between strategies like a tourist hopping countries. 1 week, it'd be all about scalping, riding the thrill of quick trades, and the next, I'd switch to swing trading, attempting to catch larger swings. This confusion cost me dearly. I remember 1 week where I was mixed up on my approaches, treating a swing setup with a scalper mindset, resulting in a huge fucking loss. It was painful, but a valuable lesson in the importance of sticking to and mastering one strategy at a time. Lesson number 3 is risk management. I only risk 1 or 2% of my account for every trade. This method ensures that my trading journey doesn't end abruptly, even on a bad day. It's not about how much you can win, but how little you can lose while making consistent profits. Now, of course, our portfolios will look vastly different, so I will do a deep dive into how I personally used to manage my account when it was smaller. Here are the guidelines, depending on your account size. For small accounts, less than 10 grand, I would risk 3 to 7%. This is where most of you guys are at. On the upper end, you have 14 trades to take. On the lower end, you have 33 trades to take. You want to risk more than some of your peers handling larger capital because you want to have a sensible risk management but still see adequate monetary gains and do some damage in the market. Now, you may ask yourself, how do I know if I'm risking too much? Simple, when you have 10 chances. 10 loss streaks, especially when you're starting out, is completely normal. I can personally have a 7 loss streak despite my experience. If you shoot all 10 bullets and miss, you're out. If you were to simply adjust your risk percentage, you would still be in a game. For a medium-sized account, from 10 grand to 100 grand, you want to risk 2 to 5%. This is where you'll start thinking you could replace your full-time job, but don't get too far ahead of yourself. You want to play in the big leagues, not remain here. Now, you can risk less in terms of percentage because your monetary gains will be more significant anyway. You have 20 to 50 chances. Use them well. For large size accounts, from 100 grand to 300 grand, you want to risk 1 to 2%. This is where you want to be. There's one more level above this, so you can't rest on your laurels yet. 1 to 2% is more than enough to sustain your lifestyle. Think making 4 to 6% per month at this point in your career. It's going to be decent, but we're not done yet. Past this point, you probably know what to do. Lesson number 4, psychological mastery. This might be the most crucial strategy of all. Trading is not just about numbers and charts, it's about mastering your emotions. Fear and greed are your worst enemies. I dedicate time to developing a resilient mindset, learning from losses without being discouraged, and not getting overconfident about wins. Meditation, journaling, and setting strict trading hours will be invaluable tools in building the psychological strength needed for successful trading. I remember a few years ago, right after I thought I had mastered my strategy, when I started to see consistent gains, left, right, center, I became overconfident, and that's when the losses hit hard. One particular day, I lost a significant amount of what I arrogantly called a sure win. It was a hard blow, forcing me to re-evaluate not just my strategy but how I approach trading mentally. Learning to maintain a probabilistic mindset has been just as important as any strategy, as nothing in trading is guaranteed. Lastly, lesson number 5, accountability partners. This might sound corny, but my trading truly started to level up when I had people around me who had the same goals to be accountable and responsible for my actions. For example, if I were to over leverage on a trade, Nick would probably call me out. If I force a trade for the sake of wanting to earn a few more bucks, Thomas will call me out in a heartbeat. Having like-minded people around you will shape you and mold you into the best trader that you can be. Our Telegram group is a great place to start. So, if you're someone new to trading and needs guidance on your road to profitability, join our free Telegram channel with close to 50,000 members. We share free signals and educational content on a daily basis. To join, click the link down in the description below where it will lead you directly to our Telegram group. Don't forget to like the video and subscribe to our YouTube channel to keep updated when we upload a brand new educational video every single week. Also, do click on the bell notification as we go live every single day, 2 times a day during London and New York. Don't miss out. So, I'll see you in the next video. Leonard, signing out.